Welcome to the Lincoln List. Today's lesson is it ain't just a number. Be sure to follow our live feed on Twitter, see more of our videos on YouTube, and like us on Facebook.
All right, welcome everybody. Doug here with the LincolnList.com, and today I want to take a few minutes to build on some of the recent lessons that we've done here in regards to support and resistance. If you've had a chance to watch those, great. This is just going to further your education. If you haven't and you want access to them, just send me an email, service@thelincolnlist.com. Ask for the support and resistance videos. I'd be glad to send those out to you for free. No problem. That way you can take a deeper look at this. But if you followed me at all, you know I've always said that support and resistance is the single greatest indicator for stocks or discovering price. Now I know these others, they have a purpose, like moving averages, Fibonacci cycles. If you can use that stuff, great. But all of this technical analysis is built around support and resistance. And one of the things that we teach at the Lincoln List, and was a big topic of my DVD, is stocks just do not change direction just for the hell of it. Like, you know, when a stock doesn't go under $45 for a few days, or it keeps bouncing off of $45, there's a reason for that. When a stock is stuck and it keeps tapping on like $52.75, and it does that for an hour and a half and it's annoying you, there's reasons that stocks behave that way, because stocks always pivot and change directions, and these numbers mean something, or they pivot in those directions for reasons, and those numbers are very, very important. Now, some numbers are a lot more important than others. We're going to talk about that. But also kind of keep in mind, this excludes things like news events. You know, there's going to be those times, you know, you got hit pieces come out and the stock gets smoked, but sometimes they'll even bounce. You know, they're going to bounce at a certain area at some point. So it's important to understand these areas. And I don't care what kind of trader you are. If you're a technical analysis trader, you've got to know this if you want to be successful. If you're a fundamental trader or you're a dart thrower, you got to know this. You got to have some idea of where a stock might change direction, because if you're trying to buy it or sell a stock, you need to know, right? You need to know if you're getting a good price. You know, if you want to buy a stock, you always want to get the best entry. Support and resistance can answer that. You know, if you're upside down on a trade and you're trying to decide, should I cut this loss or does this stock have a chance of bouncing? Support and resistance can answer that for you. So it can be used in any kind of trade idea that you might be involved in. But I'm going to discuss what we were doing today with Burl, B-U-R-L. And one of the things you've always got to keep in mind about technical analysis, it's not perfect. Is this perfect? It's not even close, but it gives you a good idea about how to pinpoint certain areas where you can manage your risk and you can take chances. You can take chances as a trader. And the thing that technical analysis allows us to do, so we all know the reason that we're using it, is it separates the emotion from the reality, right? Because the market's full of emotional traders. If there wasn't emotional traders, there wouldn't be a chart that looked like this. This is all emotion. And how you're going to be able to pick out the emotion and separate it from the reality and for you to make a decision is you're going to use that support and resistance. You're going to use that technical analysis. So for us, this trade, we kind of catch this thing as it's already down here around the 44 level. And our thought is, you know, this thing is probably a bounce candidate. And if some of the lessons I've done, I've always talked about idea, execution, and management. That's what you really need to make a trade. So the idea comes by that, hey, we want to buy it. We think it's oversold. It's a pretty good idea. So the next question becomes, well, where do you want to buy it, right? You just don't buy a stock because it's going down, and you just don't short a stock because it's going up. That's what a lot of traders do. That's why they lose money. We don't want to do that. We want to try to isolate the area. Again, we're not trying to be perfect, but we're trying to figure out, hey, where might this stock bounce? So we look at it, and when we go back into the chart, you've got 2 days. This is a 5-minute chart that I'm showing you up top. So the nearest support we have was right here, was Tuesday. It pivoted at the low, which was roughly about 44.53. Now, when you look at that 44.53, there was a pretty good, there was a kind of a stopping point, right? I mean, you look at the stock was being sold straight, and it doesn't stop until it gets to 44.50, right? No surprise that it tried to bounce there. Again, you know, a lot of people were just guessing at the bounce, but this was kind of like at least a slowdown point, because you see that was support from the previous day. Now, one of the things about support and resistance, the rule of thumb generally is the further back in time that you go, the more important the number is. So this only being 1 day, this 44.50, it is an important number, but it's not as important as if maybe this was support from the summer. That would be more important because it's further back. but it's somewhat important, and that would answer the question as to why the stock tried to bounce. It didn't do a very good job, but it did at least slow down there, and then it comes back down. We didn't see it here. We're down here. So our next thing is where's the next support zone for this stock? Well, we don't have it here, so we're going to look at the daily chart. I'm going to open this up for you so everybody can see. This is the daily. And if you look at the daily right here, you see that 2 days ago, this stock had come down into just about $43 even, and it bounced. But not only that, when you take this line and you extend it, you go all the way back to this August 24th where it really flushed. So this 43 becomes a pretty important level. Not only was it support from 2 days back, but now it's also from a few months back. So this takes on a different meaning. Remember, the further you go back, the more important. So we're going back a couple of months. This 43 is a pretty important number in the grand scheme of things with this stock. So we ask ourselves now, why is this so important to know? Well, take a look at this stock at 44 and look what happens from 44 to 43. You got this a lot of selling, right? I mean, this thing goes straight down. If people knew, if people were using support and resistance, would they have sold here? Like, let's say you longed it at 44.50 for a bounce. Then it drops down to 43. You going to sell? I mean, you're only a few cents away from major support. All the people that were selling on this last bar here, they're not reading the chart right here. They're not reading the chart. If they were looking at the chart, they would know that 43 was support. They wouldn't be panicking. They wouldn't be selling. You don't sell here, not when you're that close to support. This is where the stock most likely stands a good chance of bouncing, right? So you can see how the emotions play into trading. Like we're talking about when we said technical analysis, it separates emotion from reality. This is emotion. For us, we're looking at the reality that there's a good chance this thing is going to bounce at 43. Whoever's in this, they're just panicking. They're just hitting the button, asking questions later. And that's how, as I said, that's how it works. If there wasn't emotional buyers and sellers, stocks wouldn't look the way that they do. So we're looking at bouncing, playing the bounce here. Another thing this 43 allowed us to do is we kind of saw this around the 44 area. So we're saying to ourselves in the trade room, if this thing goes to 43, then we're going to buy some. We'll pick up some down there. Now, you got to think about this as a trader. How many of you get scared when you enter a trade? I mean, you're looking at a stock that's getting sold off, right? It's scary. If somebody would say, you're stupid for buying a stock that looks like, you're dumb for going in. It's just, the trend is my friend, they say, right? The trend is my friend. So if a trend's your friend, they're asking you to short it a couple of pennies away from from major support. It doesn't work that way. But anyway, you have to ask yourself, if you know how far ahead of time to make your decision, how much anxiety does that take out of your trading? And right, that's what we do a lot. We have fear, we have anxiety. We want to know if we're getting the right price. We want to know if we're going to get burned on a trade. But being prepared. So in this case, we had a whole dollar to think about how much position size we wanted to put on, how much risk we were willing to take, what kind of target we would be looking at if we took this trade. Having all of that rehearsed ahead of time removes a lot of the emotional problems that traders have. Certainly some of the problems that these people were thinking here when they were selling, or the people that were just randomly trying to bounce this trade without looking at support and resistance. So I'm going to kind of move forward here a little bit. And you see right here, you get this really, really good bounce. Right here, almost to that penny, hits the 43, and immediately as soon as it hits 43, this thing shoots up a dollar. This is a 5-minute chart again. 15 minutes, right? We get in here roughly just a few pennies above 43. We take the dollar move. If you're a day trader, you buy a couple of hundred shares here and there. You make $400 or $500 here, 15 minutes, and you do this multiple times a day. Now, maybe you're a different kind of trader. If you're not day trading, maybe the way you approach this and view it would be completely different. I would have to say if I was trying to hold this for a longer term, I wouldn't be looking at this level this way. I'm just kind of referring to this from a day trader's point of view, looking for these specific inflection points or bounce points or pivot points in stocks. And you can see that, looking at the chart, this wasn't that hard to figure out. I mean, once it was going down there, you had a feeling that, hey, this stock is probably going to bounce off of that level. Now, the million dollar question for every trader is how much? Sometimes they won't bounce hardly at all, and you'll just have to take a small loss or a small gain. Sometimes they'll come all the way back up to the 46 and retrace 100% of it. You never know. And sometimes it's just a pretty good one like this one. You never know, but you have to take the trade. You got to be in it to win it, right? You've got to take the play. So sometimes they'll work out a lot better than others. And this one had a pretty nice bounce here to it. And, eventually what it does here is we go back here and it shows you how these numbers mean something. When we kind of extend this line from the lows of Tuesday and you extend it out, this thing eventually bounces almost right up to that number, right? Right back up to what was previous support. So as I always say, prior support becomes previous resistance. I think I'm saying that right. It's late in the day, but this now becomes resistance. This past support now becomes resistance for the stock, and you can see it comes back up there, and it gets rejected again. Now, ultimately as the day goes on, this thing eventually loses that, and it shows you here. Here's another valuable lesson about these numbers and why you always have to pay attention and look at these numbers and why they mean so much. Because this was just a short-term trade for us, but eventually this thing loses that 43. And look what happens as soon as it loses 43, it flushes. You get a really quick $1 drop. So it spends from this peak right here, it spends a good 2 hours fading. And then as soon as it loses that number, it just flushes right out, right? And of course it comes firing back up, but look how quickly it lost it once it really gave that support up. Now, when you extend that even further throughout the rest of the day, look how many times it bounces, comes back into 43, bounces, comes back into 43, and it's pivoting off that again. Look how many times this chart intertwined with the $43 level. So maybe a newbie trader or a trader that's not paying attention would probably wonder, what's 43 got to do with the stock? Well, it's right here on the daily chart. You see it right here, how important 43 has been to this stock. And now it's sitting here, it's just, it's floating right around that number. So what does this mean now? Because you got one trade. What does this mean now as we go forward? Well, hopefully after you watch this video, you've seen the importance of 43. So if this thing holds 43 tomorrow a couple of times, what would you think the chances are that this stock will bounce, right? Pretty good. Now, what if it loses 43? That's bad. It would be bad. You'd have to look for another level to go even deeper in time to figure out where this stock might stop going down. So again, the purpose of doing this is to understand that every time what I want you guys to remember is this: when a stock moves, when it pivots like right here, when a stock pivots like right here, or it pivots right here, it doesn't matter, ask yourself, what does this number mean? Is this number have relevance? Is it important to the stock? Try to make sense of that number. And when you see it here, you got an expanded view. I posted this on my Twitter. It shows you right here it is. I mean, it's clean. I'm making a mess of this chart. But it shows you why that number was important. It shows you how predictable it was. Honestly, I'd like to take credit for it and say I'm a genius, that we saw, I'm some kind of smart person, and I just magically knew by something I created myself that was going to make it bounce. But I didn't. All I said was, hey, look, wow, this is awesome. This 43 is great. If it hits this number, it's probably going to bounce. I think I'm going to buy it. That's all I did. I mean, that's the extent of my trading intelligence sometimes. And it bounced, Even if it wouldn't have bounced, it most likely would have slowed down just like it did here. Just like it did in this other shorter term, where we go? Just like we did in this shorter term area right here. In this 44.50s, it probably, it would have slowed down at least like that. And if it didn't bounce after 10, 15 minutes, then, we would have got out of it. But it shows you how to, again, idea execution management, planning ahead, eliminating anxiety, understanding all of this, and combining combining this with the other things that you know. So if you're using moving averages, if you're using stochastics, if you're using RSIs, if you're using Fibonacci's, your basis for that is support and resistance. You're using the support and resistance to help determine the entries, to help manage that trade. You combine it with some of the other things, and it gives you a clean picture on the confidence that you need to execute your game plan and ultimately make money as a trader. So look, if you guys need some help, I kind of ranted a lot there. I usually get really excited when I talk about support and resistance because it's like, boy, it's just really easy to learn, it's easy to implement, and it has such impacting results. So if you're looking to kind of go to the next level, visit the lincolnlist.com. Feel free to take a 14-day free trial to our live trades room. See these trades made live and screen. See how we find these and see how we manage these, because there's a little bit more that goes into it. But at least you get a really, really good idea about the importance, of support and resistance. So thanks for watching this video. Thanks for listening to me rant. Till next time, take care of yourself.